Hi, I'm Brock.
I'm Jim.
Before we get started, if you want to stay ahead of the cattle markets, sign up for our free daily briefing at herdadvisor.com. It's delivered right to your inbox every morning, 5-minute read. And if you've ever wished you could keep complete cattle records without the clipboard, the Cattle Record Guide lets you enter records from the field with your gloves on. Just say, "Hey Siri, try it free for 14 days at herdadvisor.com. Welcome back to Cattle Market, guys. I'm Brock, joined as always by Jim, and we've got a packed Tuesday update for you. We're going to cover the latest feeder cattle prices and forecasts, a serious biosecurity situation developing in Texas, some global feed supply news you need to be watching, and the latest cattle on feed numbers out of USDA. Let's get right into it.
Let's do it.
Starting with the market snapshot. The most recent data we have is from the week of June 14th, and the numbers are still holding strong at the top end of historic ranges. Looking at steers in the 500 to 549 pound weight class, we're sitting at $449.54 per hundredweight. That's actually a slight dip from the week prior when that same class was trading at $450.13, but nothing dramatic. If you go back to mid-May, that class was fetching $463.31 per hundredweight. So we've seen a gradual softening of about $14 over the past month. Volume in that class has been average, with around 3,500 head trading in the most recent week. Jim, you've watched these markets a long time. Still pretty good money compared to where we've been?
Still awfully good money for light calves. Ranchers would have been happy to see half those numbers 10 years ago.
That's fair. On the heavier end, the 600 to 649 pound steer class came in at $407.72 per hundredweight for the week of June 14th on heavy volume with over 5,100 head traded. That class has also softened slightly from a month ago when it was running closer to $413.85. The spread between light and heavy calves is still notable. You're looking at roughly $42 per hundredweight premium for the lighter weight class, which reflects the ongoing demand for cattle that still have a long feeding window ahead of them. Now, forward futures are telling a somewhat different story. Front month futures are running at $360.82, and next month is sitting just below that at $358.48. That's a meaningful basis gap compared to current cash prices, and producers need to be watching that spread carefully as they make placement and marketing decisions. Does that match what you're seeing, Jim?
That basis spread is wide enough to drive a truck through. I'd be penciling that out real careful before I made any commitments.
Exactly the right way to think about it. Our model forecast for the next 4 weeks show the 600 to 649 class coming in at $383.73 per hundredweight in week 1, climbing to $411.01 in week 2, then pulling back to $388.96 in week 3, and further to $371.42 by week 4. The lighter 500 to 549 class is forecast at $423.14 for week 1, $431.71 in week 2, $432.08 in week 3, and then dropping to $405.71 by week 4. So the model is suggesting some price softening at the tail end of the next month, worth keeping an eye on as summer heat and seasonal patterns play out. Let's move on to something that frankly every producer with cattle in the southern half of the country needs to be paying very close attention to right now. New World screwworm has now reached 15 confirmed cases in the United States, with 3 additional animals testing positive in Texas in the most recent reporting period. According to reporting published this past weekend by the Cattle Site, the situation is escalating, and what makes this particularly concerning is the containment capacity gap we're facing. A new sterile fly facility that would meaningfully scale up the response isn't expected to come online until late 2027. That's a significant window where the primary biological tool for suppressing screwworm populations simply isn't going to be available at full capacity. On top of that, the UN's International Atomic Energy Agency and the UN Food Agency jointly launched a $1 million research project to help combat the outbreak across the Americas. The fact that international agencies are mobilizing at that level tells you something about the scale of concern here. There's also a Texas rancher named Cole Covey out of Tom Green County who gave a firsthand account of identifying and reporting a suspected case. And that kind of on-the-ground knowledge, knowing what to look for and how to navigate the reporting process, is exactly what more producers need right now. Jim, this one takes you back, doesn't it?
Well, I'll tell you what, this takes me right back to 1994. We had a scare out in Presidio County. A neighbor of mine found a calf with a wound that just wasn't healing right, smelled wrong, and he knew. We'd all grown up hearing the old timers talk about screwworm before eradication, so we knew what to watch for. USDA had a hotline and they were out there within 2 days. Turned out to be a confirmed case, and word spread faster than any newspaper could carry it. Every rancher within 100 miles was out checking their cattle that same week. The thing about screwworm is it don't wait for you to get around to it. You miss it a few days and you can lose an animal. Simple as that.
That's a critical point, and it goes right to the heart of why the reporting process matters so much. The eradication program held back in the 90s largely because producers were vigilant and the sterile fly infrastructure was functioning. Right now, we're in a situation where that infrastructure is underfunded and a new facility is still well over a year out at minimum. What producers can do today is know the signs. Screwworm larvae infesting open wounds, unusual wound odor, behavioral signs of distress in your animals, and know who to call. Contact your state veterinarian or local USDA Animal and Plant Health Inspection Service office immediately if something looks wrong. The Texas cases are concentrated enough right now that ranchers in surrounding counties shouldn't be complacent. 15 confirmed cases is not a manageable local problem anymore. It's a spreading outbreak, and early detection at the ranch level is going to be the difference maker until that sterile fly capacity comes online.
When it comes to screwworm, an ounce of detection is worth a whole lot more than a pound of cure.
Couldn't say it better. Let's shift to the broader feed supply picture because there are some cross currents in the global data that have real implications for your input costs heading into the second half of the year. The cattle site reported this week that a potential super El Nino is expected to unsettle global weather patterns and potentially threaten food and feed grain output in the coming months. That's the concerning headline. The somewhat reassuring counterpoint is that world wheat and rice inventories are sitting near multi-year highs right now, which is expected to cushion the impact of any weather-driven supply disruptions. On the domestic side, USDA's Farm Service Agency is adding 30 million base acres to the ARC and PLC programs. That's the Agriculture Risk Coverage and Price Loss Coverage programs for anyone newer to the policy side of things. They're also launching new acreage reporting technology nationwide in 2027. That expanded base acreage matters because it affects what safety net support looks like for grain farmers, which downstream affects how much corn and feed grain comes to market. Jim, 30 million acres, and that's not a small number.
30 million acres is a lot of ground. That's not rounding error territory.
It really isn't, and the timing is meaningful given the El Nino uncertainty. There's also a longer-term concern coming out of Farm Progress reporting this week about agricultural land use. The expansion of data centers and solar farms onto farmland is becoming a real conversation in production agriculture circles. It's not an immediate production impact, but when you start converting prime agricultural ground to server farms and solar arrays, you're making a structural shift in feed grain production capacity that doesn't reverse quickly. New Zealand's dairy sector is already seeing the downstream effects of global feed competition. Palm kernel feed imports, they're hit a record high this year, and fertilizer imports are elevated as well. That global competition for supplemental feed resources is something U.S. cattle producers should be watching because tighter global feed supplies eventually translate to higher input costs here at home. The record grain inventories are a buffer today, but they're not a permanent solution if weather patterns shift and farmland continues to convert out of production. What do you think about that land use piece, Jim?
You know, they're paving paradise to put up a server farm. Seems like a bad trade to me.
Well, hard to argue with that. All right, let's close out with the USDA Cattle on Feed report, which dropped on June 19th. According to Cattle Range's reporting, U.S. cattle and calves on feed are up 2% compared to the same time last year. That number sounds modest, but in a market that's already been working through tight supplies and strong demand, a 2% year-over-year increase in feedlot inventory is worth paying attention to. It signals more beef supply coming through the pipeline over the next several months. The other piece of news that actually offers some relief is the drought monitor data for the week ending June 16th. Drought across the lower 48 states decreased 2% week over week and is down a full 10.5% over the broader recent period. Improving moisture conditions ease pressure on hay and forage availability, which is genuinely good news for cow-calf producers managing summer grazing. Jim, I know you've seen a setup like this before.
Back in '96, I sat at the kitchen table looking at cattle on feed numbers that looked about like these, and I thought, well, here it comes. We'd had a good tight supply run, prices were strong, and everybody and their brother was putting cattle on feed at the same time. Corn wasn't killing you on the feed bill after the drought broke. Sounded like good news all around, but I'd seen that movie before. When everybody's feeding cattle and the drought breaks at once, you got a lot of beef hitting the market in the same window. Sure enough, by that fall, the fed cattle market got heavy and prices softened up more than most folks had penciled in. The supply side of this business has a way of solving problems by creating new ones.
That's the pattern to watch for. More cattle on feed combined with improving drought conditions and strong grain stocks sounds like a green light, and in many ways it is. But the market sees that same green light at the same time. The 2% increase we're seeing now isn't alarming on its own, but layered on top of the softening price forecasts our model is showing in weeks 3 and 4, it starts to tell a coherent story. Producers making placement decisions today should be stress testing their break-evens against a scenario where fed cattle prices are meaningfully lower than they are right now when those animals come off feed. That's not a prediction. It's a planning discipline. Watch the weekly placement numbers as they come in over the next month. Keep an eye on how El Nino develops and what it does to Corn Belt weather, and stay on top of the screwworm situation if you're anywhere near Texas. That's what the data is telling us this week. Jim, anything to add before we wrap it up?
Just stay out in your pastures checking your cattle. The market will do what it does, but screwworm won't wait for you to get around to it.
Well said. Thanks for listening to Cattle Market Guys. We'll be back with more updates later this week. Stay informed, stay profitable, and we'll talk to you soon. That's all for today. Remember to sign up for our free daily briefing at herdadvisor.com. And if you want complete cattle records without the hassle, try the Cattle Record Guide free for 14 days. Enter records from the field with your gloves on. Just say, "Hey Siri."
Catch you in a couple days.
All right, see you then.